Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up in their names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
Hey everyone, welcome back to the channel. So today we're going to talk about how to get started in the stock market. I do have my laptop in front of me. I could go over my portfolio, but I've done that for the last 5 videos. So if you want to see my stock market account, just look for the video of me holding up my laptop like I do on almost every video that talks about stocks, and you'll see my portfolio. So I think I've shown enough of my own portfolio, and I just want to talk to you about how to begin in the stock market. I want to definitely give you guys some new information so that you can walk away with something very educational and very right for you. So the stock market is the easiest gateway to entry. If you got a note, you got a pad, write that down. Easiest gateway to entry. When I started in the stock market, I started with about $50 to $200 on a Robinhood account. All right. Easiest gateway to entry is the stock market. So that means it's going to require less legwork and it's going to require less of a commitment from you in order to get started. It's also going to allow you to invest in companies that you actually love. Whether you have Meta or Facebook, whatever you want to call it, whether you have an iPhone and you like Apple stock, whether you have Nike shoes and you like the company, you love what it stands for, you love their vision, you love the direction that they're going in. Now, I'm not your financial advisor. I am just an average guy on YouTube, so I am not giving you any advice, but I do post my accounts online from time to time on YouTube, so you can see what I am invested in, and you can make decisions for yourself in whether or not to invest in those companies. I have beat the stock market every single year for the last 10 years, and so I am absolutely a seasoned investor, and I'll make another video soon enough on how I beat the Warren Buffett approach, right? Because he said that nobody can beat the S&P 500 10 years in a row. I did. So if you're ever going to listen to somebody, hey, this YouTuber might be the best one to listen to. Now, again, I started with $50 to $200. I invested in companies I had no idea about. This is how bad I was. I even invested in Ford at one point. I was day trading Ford stock. Yes, the automaker, Ford, the company that makes cars. Have you heard of them before? Yes, I actually was day trading Ford. And guess what? I did make a profit. I didn't lose money on Ford. I didn't lose any money at all. But it was like a $10 company at the time. I'm actually curious to see where they are now, almost like 9 years later. But let me see. Ford stock. Still $9.48. I can swear that this company does not move in value over the last 10 good years. So it's at $9.48 at the time of me making this video. It is just hilarious to see that. Over 5 years, it has gone up $1.59. Unbelievable. Unbelievable. Only in January 14th of 2022 did it go up to $25.19 at one point. That means it more than doubled at one point. I remember having this stock at like $9, $10. The lowest that I'm seeing is in March of 2020, and it was $4.33. If I had seen it at $4.33, I would have absolutely assumed that the company was going to go bankrupt. But they made a bounce back during COVID. They shot back down to about $11, and then they've hovered around $9, $10. So Ford is a company that sticks around. They don't know when to give up. They don't know when to quit. But yeah, that was That was the type of investments I was making at the time. I was day trading. I was figuring it out. I was trying to make 10 cents, 20 cents, 50 cents on the day. And I was okay with that. I was learning something about the stock market. I was learning how to day trade. I was learning how to swing trade, which is when you buy a company, maybe you didn't make a profit the first day, you swing it and you make money the second day, right? So you swing trade. You wait for the stock to go back up and then you sell. And that's exactly what I was doing. I was doing that with $50, $200. And I just continued to do that so that I gained experience. I started to understand these stocks better. I started to understand the emotion that people had in the market. When people say the stock market is very volatile because of how emotional it is, like let's say Tesla had 200,000 recalls because a line break in a steering wheel or whatever the case may be. People hear that on the news, they say, oh my goodness, Tesla is not safe. Let me sell all my stock in Tesla. That's an emotional investment, right? This is somebody who didn't truly believe in the company, didn't truly believe with the vision, didn't truly believe in automation of vehicles for electrified America, for electrified future. And so they're going to sell off. What I would do is I would buy more because I believe in the vision, I believe in their future, and I know where it's going. And so as a seasoned investor, I don't sell off and I'm going to make additional profits based on people's volatility, right? And so when stock markets are down, I absolutely love that because I invest more into the stock market when it's down. And so when people are scared of the volatility, seasoned investors like myself see that as a huge opportunity for me to get into the market and make a huge investment. Absolutely love it. So I just invested another $6,000 into the stock market right before tax season. So you already know what that means. When everybody get their taxes, some people are going to go on vacation. Some people will be pulling out the stock market. Other people will be investing that money into the stock market. And that money is going to be invested on top of my money, which is, let me hear it, compound interest. Absolutely. I love it. I love capital gains. I love compound interest. So with that being said, now, as a beginner, maybe you don't have $200 to invest. Maybe you only have $10 and you want to invest in a company like Ford that's only $9 a share. What I'm going to say is no. There are so many vehicles out there that allow you to dollar cost average, that allow you to do fractional sharing. What you want to do is, although you don't get to own a whole share, and I know that's a big thing for a lot of you rookies, you want to own a share of a whole company. You just want to say, I own the whole thing. It's okay to own 10% of Meta. It's okay to own 5% of Nike and not own a whole share. Buy what you can of a good, solid company. Not of a company that you don't even believe in, but because you know the name, you want to invest in it. And as you all know, if you've been watching me long enough, I am a dividend stock market investor. What does that mean? That means I buy dividend stocks, but I don't only just buy dividend stocks. I buy stocks that grow in their dividend and in their equity every single year, year over year. So I'm a dividend growth investor. With that being said, I don't want you to look at that and say, oh, you're a dividend investor. Let me buy the highest paying dividend stock. And then you buy some AT&T, and I think they have like a 9 or 7% dividend right now. That is an amazing dividend. But you know what? Companies that have to pay 9 and 7% dividends on their shares, that means for every $1,000, you're getting 7% of that money. They're not a good company. You should know that. If a company has to incentivize you to invest in them by paying you a huge dividend, they're not a good company. That is why Disney never paid such a huge dividend. Tesla doesn't even pay a dividend. Amazon doesn't even pay a dividend. Google pays a very small dividend. Meta pays a very small dividend. Coca-Cola pays a very small dividend. Pepsi pays a very small dividend. McDonald's pays a very small dividend. You know why? Because these are solid companies that are going to grow over time. And so they pay you a small thing just to say thank you, but they already know how good they are as well. And so I love companies that grow over time, pay me a small dividend to keep me happy, and lets me know, hey, we're going to continue to go up. I don't want a company that doesn't grow at all, but they pay me 7% dividend. Because as you saw from my last time I showed you my stock market account, my growth was $17,000. My dividend was $2,000. That's $19,000. But even though I say I'm a growth dividend investor and I love my dividends, all that money I made was really from the growth of my stocks, right? Almost 17,000 in growth, only 2,000 in dividends. That should tell you something. I need to grow my portfolio, and eventually the dividends will come because it's going to continue to compound and compound and compound. But what I don't want to see is everyone getting stuck on the dividend because you want to get paid every single month or every 3 months from the dividend, and you forget to invest in solid companies. So again, rule number 1, don't buy a company just because you can afford the whole thing. Rule number 2, don't invest in a company just for the dividend. You need to like it, you need to know it, you need to use it, and you need to love it. Not love it, but you need to know its future. If you understand those 4 things, and you still want to invest in a company that has a solid dividend, is averaging more than 10% returns over a 1-year period, and is averaging over a 30% return over a 5-year period, and even better if it's down on the day, because that means you get to buy in at a small discount. Absolutely invest in that. That sounds like a great thing to do, right? And so I have 26 companies I'm invested in right now. 26. I like it. I use it. I know it. I love it. I believe in its future, and so I invest in it. You do the same with companies that you like, love, use, and know, and you'll also average somewhere close to 34% like I did this year. Now, granted, every single year will be different. I typically average about 28% returns, but this year I'm at 34.27 or 34.47%, and that's great. S&P 500 averaged about 19% this year, so it also overachieved. The stock market has been doing good for the last 3 years, like overachieving. So it's really hard to fail right now. So get into the market, start to learn the market, start to understand the market. 97% of people actually will make money just by getting into the S&P 500 over a 10-year period. 97%. 97% of people. 10-year period, 97% will make money. So with that being said, I hope you like this video. I hope you'll leave a like, comment, and subscribe to the channel. You know I post on YouTube, Rumble, and Spotify for podcasters. And I can't wait to see you in the next one. Peace.